Hey folks, it's Kevin. In October 2021, Goldman Sachs published a price prediction stating that by the end of 2022, US home values will have appreciated by 16%. To put this into perspective, in 2021, we saw US home values appreciate just under 18%. Now, I know this varies depending on where you live within the United States, and some markets appreciate faster than others. However, for those of us fortunate to live here in San Diego, we saw appreciation just under 18% in 2021. Now, what does this mean for you? Let's say hypothetically you were planning on purchasing a home at $700,000, and yet you decided to wait 12 months and Goldman Sachs' price prediction was accurate. That very same home that you were thinking about buying at $700,000 is now worth $812,000. To take it one step further, let's assume the interest rates remain the exact same. Your payment would now be $700 more a month because you decided to wait and purchase at $812,000 rather than just buying that home today. So what's keeping you from purchasing a home sooner rather than later? For most people, it's the down payment. And yet, what if I were to tell you that the minimum down payment requirement on a home loan up to $668,000 is just 3%? To take it one step further, the minimum down payment on a loan amount up to $925,000 is just 5%. Now understand that you probably want to save more money to ultimately put more money down to avoid paying into mortgage insurance. And yet, think about what we talked about earlier. Remember that Goldman Sachs predicted that US home values would appreciate by 16% by the end of 2022, which means that if you purchase a home today with as little as 3% down and simply made your payments on time and allowed a rising tide to get you there, by the end of 2022, you would be at or near a 20% equity position. And why this is so important is because once you get to a 20% equity position, you can call up your mortgage bank and ask them to remove your mortgage insurance, which in turn would save you a few $100s every month. And how nice would it be to put less money down, keeping the remaining funds in the bank, and after just 12 short months, being able to reduce your monthly payment by a few $100s? Welcome to what new homeowners in 2020 experienced. And yet, what's causing homes to appreciate at such a rapid pace? Within the article published by Housing Wire, the author states that the rapid increase in home prices over the past year was due to a number of colliding factors, including low interest rates, tight housing inventory, pandemic-induced migration patterns, and an increase in millennials entering the housing market. In addition, as fears of inflation increase, many investors are purchasing properties as long-term assets. As we look at these economic factors, we can't help but recognize that much isn't going to change in 2022. We've heard whispers of the Fed increasing interest rates, which is typically a cause to the effect of mortgage interest rates increasing as well. And yet, is that enough to course correct the direction of appreciation that we're experiencing? I guess we'll just have to wait and see. And until then, I strongly encourage my friends and family to purchase sooner rather than later. With that being said, thank you so much for watching. If you found value in this video, please hit the like button, send it to a friend or a family member who would find it of value. Maybe they're considering purchasing a home in the upcoming year. And lastly, please subscribe to my channel and stay posted on any future videos. I'll see you in the next one.